We as humans are creatures of habits, and profitable traders have developed a set of habits that is different from losing traders. This video will cover the top 5 trading habits that will keep you poor and eventually lead to you blowing your trading account. You will probably be surprised with the 4th trading habit, which actually seems like a good habit, but in reality it is detrimental to your success as a trader. Towards the end of this video, I will also show you a matrix that you can use to determine if you are holding your losses for too long. So make sure to stick around and watch this video till the end, because I know this is going to be super helpful. Now, before I dive into the first trading habit, please hit the thumbs up button and subscribe to the channel. It really helps this channel to grow and I appreciate that. We also do a giveaway worth $37 for each new video that we upload. So if you want to participate, look for an emoji somewhere in this video. You can also find the full instructions in the pinned comments down below as well. Moving on to the first trading habit, which I know most of you are guilty of, and that is chasing the market. Now here's the thing, the market is never obvious. It is designed to fool most of the people most of the time. By the time it is very obvious, it is probably already too late in most cases. Like the recent trend in Bitcoin and stocks like Tesla, yes, it might somewhat work in a trending market, but hey, you're not accounting for the fact that markets consolidate majority of the time. Chasing the market will never give you an edge in the market in the long run. So be patient and wait for the market to retrace if you miss the boat. Remember, if you chase the trade, you are risking more to make less, and you're going to find it hard to pay for your losses if you trade like that. Now let's move on to the second habit, which is being lazy and not sizing your positions. I get it, it's a pain in the ass to size up your positions, especially if you are trading on your mobile phone and you are afraid that the price will start moving immediately. But here's why it's such a bad idea to use the same position size for all your trades. Suppose that you trade one lot for a trade that has a stop loss of 30 pips, and the same one lot for another trade that has a stop loss of 300 pips. And unfortunately, the losing trade was the second trade. In this case, your account is down by a big amount, and you are going to need to make many winning trades just to recover from this loss. So get into the habit of sizing your positions based on your stop loss for each trade. Now, if you are really lazy, then calculate it once and use a rule of thumb to estimate your position size. It's still better than using the same lot size for every single trade. So suppose that you should be trading one lot for a 30 pips stop loss, and you want to take a trade with a stop loss of 60 pips. Then you can just apply the rule of thumb of one lot for 30 pips and therefore 0.5 lots for a 60 pips stop loss. Now moving on to the third habit, which I was guilty of in my earlier days of trading as well. This third habit is jumping around from strategy to strategy. I'm pretty sure you know what I'm talking about. It's a path that is almost inevitable as you progress as a trader. Many stay there, and that's why they don't eventually become a profitable trader. Many of you hop from strategy to strategy without giving ample time for a strategy to prove itself. You take a couple of trades, and if it doesn't work out, you conclude that it isn't working. So what happens is you are always trying new strategies and none of them seems to work for you. You see others make a killing using the strategy, but somehow you can't replicate that success. May I just suggest that one of the main reasons is that people rarely show their losses. So many of you have the wrong perception about what it takes to find winning trades. You may see 5 winning trades on your mentor's account. But hey, did you know that they went through 7 losing trades and cut them fast in order to find these winners? In fact, here's a challenge I have for you. Try Googling losing Forex accounts and you will find it hard to find images of accounts that have lost money. Now, if you are unsure whether you have this bad habit, then I have a litmus test for you. Ask yourself if you know what are the precise conditions that you must see in order to take a trade. For example, for the MPE strategy, it will be market condition, key price level, and an entry trigger. If you are not clear or are constantly changing these conditions, then it is almost certain that hopping from strategy to strategy is a habit that you have. And I hate to break it to you, but this is one of the surefire ways to blow your account. So my advice would be to stick to a given strategy, test it thoroughly with 100 trades, and then make a decision about whether it is working for you or not. I've recorded many trading strategy videos on this channel, but if you are confused and unsure where to start or which strategy to use, please start by downloading the free day trading guide and watching the market outlook videos. You can find the link to download it in the description down below. It's 100% free and that's where you should start. But please, commit to taking 100 trades and follow through with it. It doesn't have to be real money, it could be a demo account, but you do have to stick at it to arrive at a statistically significant conclusion. Let's move on to the 4th trading habit, which I gave a little teaser at the introduction of this video. This 4th trading habit is over-analyzing the charts. Well, did that shock you? Well, it should. So what do I mean by over-analyzing? Well, I'm referring to throwing additional indicators, lines, rules, etc. just to perfect the system. Let me give you an example. So perhaps you are trading the MPE trading strategy that I teach in this channel. But because you refuse to accept that the win rate is probably only about 55 to 60%, you start to overanalyze and throw in additional filters. If you find yourself overanalyzing, that's feedback telling you that you have not fully accepted the risk in trading. And if you want to be a profitable trader, you have to overcome this bad trading habit of tweaking things to avoid losses. Trading should be simple. You see the setup, you take the trade without second guessing, not throwing in some random variables each time you take a trade. In fact, you will never be consistent in trading if your approach to trading isn't consistent. Now let's move on to the last habit, which is holding losses. This is probably the biggest one that is responsible for blown accounts. Holding your losses may come in the form of refusing to set in a stop loss or widening your stop loss just because you don't want to realize the loss. I often get questions on this channel about fixing their stop loss. The subscriber might say something like, "Hey, my account is in the red with a floating loss of 80%. What should I do to remedy the loss?" Well, unfortunately, there's no solution to that except to take the loss. Now, at the start of this video, I promised to give you a matrix to help you determine whether you are cutting your losses or holding it for too long. Well, this matrix is the average holding duration of a loser. As the saying goes, hold your winners, cut your losses. If you are doing this correctly, then your average holding duration of a winner should be longer than that of your losers. Why? Because you're holding your winners, and holding equates to a longer holding period. So what I recommend that you do is to compare your average holding duration of your winners and losers. This way, you can quickly pinpoint if you are cutting your losses fast enough or whether you need to learn to ride your winners longer. Now, this isn't the only metric, of course, because you want to pay attention to how much you are losing each time, and all those other statistics as well. But this is a pretty useful statistic, so if you find yourself holding losses, do work on eliminating this bad habit. So here's a quick summary of the 5 trading habits that will keep you poor and blow your account. Number 1, chasing the market. Number 2, using a fixed lot size. Number 3, jumping from strategy to strategy. Number 4, overanalyzing. And lastly, number 5, holding losses. And that's it for this video. I will provide a link to the MPE trading strategy here as well. And if you are new to trading, that's the video I recommend that you check out next. Thanks for watching. I will catch you in the next one.